Let's start off with KCB. The fact that this bank is now the most recent bank to cut its lending rates, of course, following in the footsteps of Barclays and Cooperative Bank as well.
Well, we expect there to be a domino effect across the industry. It's a good thing. Interest rates are going down generally. If you look at the 90-day T-bill rate, it's now at around 4.9. But if you compare it to Uganda's and Tanzania's, Tanzania is around 1.6 and Uganda's is about 4%. So I think we'll be moving more towards that. I think the fact that we are also having more liquidity in the market, people have more money in their pockets, then there will be some more competition in terms of banks getting people to borrow from them. And I believe that it's a good thing. The problem is that I'm wondering if this will really help the retail borrower. I think it's really mostly being targeted at the corporate borrowers, and there's a lot of expenses that come with taking loans that have still not yet been addressed.
Well, Samuel, it's an interesting point that you make, because it is about trying to get demand for credit to grow not only on a corporate level but on a consumer level as well. We've also seen NIC Bank cutting its lending rate, but at the end of the day we know that the IMF has put the financial sector under the spotlight, saying that it needs to see some regulatory changes. How does this affect the banking sector in Kenya?
Well, generally, the regulators don't have that much in terms of teeth. They can't really affect how the banks operate. And I think the fact that we are in an open market and it's competitive, it's all dependent on how the leaders react to the interest rate changes. So I think the fact that some of them have already done that, and KCB, for example, is the biggest in asset base, and Barclays is actually our biggest bank in the country, then I believe that obviously the rest will have to follow suit. The problem is the regulators need also to look at the expenses that come with borrowing from them, because all these insurance costs and all those other costs are the ones that also tend to push up the amount it costs to borrow.
Samuel, also a deal imminent between the likes of Barclays Bank and Standard Chartered. Of course, Barclays Bank planning to transfer some of its custody and securities business to the likes of Standard Chartered. So the game changing quite rapidly in Kenya.
Well, in terms of Barclays, most of their policy is not set locally. I think being an international bank, they're just reacting to what the bigger boys out there are doing. So I think this was actually a decision not made locally. It has been profitable. I believe their custodial services have been profitable locally. And I think it's not going to really affect their shareholder value, so I don't think it's going to reflect on the market per se.
Looking at turning our attention now to the telecom sector, we had Zain saying that in East Africa revenues could be up by 50%, and of course we know that they've tied up with the likes of Bharti, and Bharti came out recently with some of the results showing that profit was slumped by 8%. How strong is the Bharti-Zain deal in Kenya at this stage? We know that Safaricom is doing quite well, and they're constantly making quite a bit of headway in terms of technological advances as well. So 50% of Kenya's market's currently penetrated, so there's still quite a long way to go. Competition, though, becoming quite rife in that region.
Well, we've seen the regulator also stepping in to try and stop any dirty tricks in terms of locking in customers and the sort of rates that they charge across networks. But I think Bharti will come in with a new push. I believe that it's about time Zain went to the 3G network, but already you see Safaricom is already going on to another platform, which means Safaricom is way ahead of the other players in terms of innovation, in terms of proactiveness, and in terms of getting things to the customer. And although Safaricom has indeed been seen to sort of be reluctant to, open up the market for other players, there's still a lot the other players have to do to actually catch up.
Samuel, looking at the overall market, we saw a little bit of weakness coming through yesterday. No surprise there, given that the markets have been rallying quite significantly. We're constantly hitting new highs on the NSE 20. What's going to push us higher from these levels?
Well, I think it's a positive reaction to, or rather, a peaceful referendum. I think foreign investors have taken a wait-and-see stance at the moment. If you look at the percentages of foreign buying and foreign selling, you will notice that foreigners are now taking up about 20% of the turnover on a daily basis. You'll also notice that Safaricom is no longer as dominant as it was, and we are seeing a shift to the financial and the industrial sector. So I believe that the local investors are the ones who have stepped up to, hold up the sort of turnover and volumes we were doing before, and the foreigners are feeling a bit jittery in case the referendum turns out to be like the last election. So I think the political risk is the main issue here, and if they do feel that there is no political risk, then we are going to have another rally.